right. What a pleasure to get to spend some time on stage with you today, Robyn. Thank you for being here. You are a longtime MFA member. Man Group has been a part of the organization for a long time. I want to thank you for that.
You're welcome.
You also are the CEO of the world's largest publicly traded hedge fund. And you're often praised for your leadership style. I think you've been in the role nearly 2 years. Would love to hear just a little bit about your pathway to the CEO seat and how you think about your leadership.
Sure. Thank you for having me. I suppose that my pathway has been an unusual one in that I came through a route which was through being a general counsel, being a COO, being a CAO, coming through all different parts of the firm. And I was at Man Group for 15 years before being asked to take on this role. So an unusual route in that what I didn't do was come up through the classic investment management side, albeit I might have run trading or run certain parts of our investing universe, but not through the classic route. As for style, investing style, or my own personal leadership style, I can't claim too much credit for it other than I just turn up and I do it like this every day.
That's great. It seems to be working well for you. So speaking of Man Group, publicly traded, very large organization that has a lot of stakeholders, really vast constituents that Man Group cares about relative to most large global hedge funds. How do you think about how that differentiates Man Group from other hedge funds? And how does that impact your business decision-making as a publicly traded company?
Yeah, listen, we're 240-ish years old. I am not 240-ish years old, but the company is. And it's been listed for 35 or so years. What does it mean? It means that when we talk to clients, they have transparency about who we are and what we are. We have quarterly reportings, which can be useful because basically anybody who invests in us can see what our position is in the market, how we are faring, whether there's anything they should know about. They know our financial stability, they know all of that stuff. So there are some benefits to being listed, but it's an unusual thing because not many of our peers are in that same position. I think one of the things that's very clear for us though at Man is that we have one goal, right? It's really simple. We come into work every day and we're entrusted with the savings and pensions of real people all over the world. And our job is to put the resources of Man Group in a room to make sure that we return value on those investments. And the reason I say it like that is because given how we operate, given our listed status, quite simply, you're not going to find me on a flight of fancy going and buying a sports team tomorrow. We know what we do. We come into work to do it every day. We never lose sight of that single purpose.
In the US, where we sit today, we have been experiencing immense change politically. I'm based in Washington, so this is something that I certainly experience day in and day out. It's been a big week with a new administration. Man Group is not a US headquartered hedge fund, as many of the large globally active hedge funds are. How does that afford you the opportunity to really kind of step back and look at the state of the world, particularly US political dynamics, and observe the potential uncertainty and the way ahead?
I barely noticed there'd been a new administration. It took me by surprise. It's quite an interesting time, right? 4 billion or so people went to the polls last year. We had a huge period of uncertainty in how were these things going to find their way out. And perhaps there were some people perhaps in this room and some people perhaps on this stage who were surprised by what happened through some of these election cycles. Being in Europe has enabled us to have perspective over many, many years about what it is to operate in different jurisdictions and deal with different environments, regimes, regulations, as they shift and move. We did a fabulous thing called Brexit, which put us back to operating in Europe in a very different way as well. I think what's very interesting about the position we face in the US is the words America and exceptionalism just are seemingly joined with gorilla glue at the moment, and ever were it thus. So as we have seen the Trump administration come in, despite the 150 or whatever executive orders. What we haven't seen is a slew of tariffs, for example. What we're still waiting to see is whether we get good for the markets Trump or less good for the markets Trump. And by good for the markets, I mean, are we going to see deregulation? Are we going to see a reduction in taxes? Are we going to see something coming out of DOGE, which I think is a funny acronym for any number of reasons if you have any historic past? Are you going to see the peacemaker? If these things come into play, I think that they are exceptionally strong things for markets. Or are you going to see some of the disruptive elements? Are you going to see not peacemaking? Are you going to see some of the rhetoric around 51st states or Greenland or some of those other pieces of the puzzle, which have some interesting capabilities and impacts? What we are also seeing is definitely a response from the Fed in the fiscal policy piece, and we're priced into the markets with very minimal interest rate cuts right now. So we also know we're in a slightly inflationary environment. We know we're in an interest rate environment. So we also know we're going to have a time of volatility, and we're going to have some times of dispersion. And so when we sit back from this and we look at some of the macro-political or the geopolitical pieces that sit between Russia and Ukraine, or you might want to see it in the Middle East, or you might want to see how we're using up oil reserves in Europe right now because it's cold, actually that perspective allows us to see where there are opportunities in markets beyond the richness of equities in the US, where clients are navigating these changes and how they're thinking about portfolio construction and navigating volatility and the dispersion that we're going to see in the markets. And we didn't have to go very far when we all woke up on Monday with this fabulous news about DeepSeek to see how fragile even the S&P is in these moments. So good perspective to sit back, good perspective to see what this thing is called American exceptionalism. Interesting to see where there are other opportunities in other asset classes and in other jurisdictions that can be mined, and a real sense of how people need to think about portfolio construction as they do the best job they can for their underlying clients.
Mm-hmm. Yeah, the ability to really diversify kind of with the political lens in mind, I can see as a real advantage. I think it's easy to get stuck in one's paradigm, and probably many companies operating only in the US see the US as the center of the universe, and maybe being outside of it affords you the opportunity to kind of sift through some of the noise and take in that information differently.
Some and some. I mean, we have 500 people in the US. The US is the deepest, the best, might say, capital market in the world. You can't ignore it. And there's an interesting piece about, well, what's the alternative to it as well? There's lots and lots of conversations right now that say, okay, but if there is some break in market in the US, where does capital go? Where actually is the home? And so I think that there is no doubt this is an exciting time in the US. It's an exciting time for all of us to do our jobs. It's just not an easy time. So leaning into this and being more nuanced in this space, I think, is what we're here to do.
I want to switch gears a little bit to certainly what we're observing is an industry trend, but also something that is getting a lot of attention from policymakers as well, and that is the so-called democratization of alternative asset management. Yep. And this discussion around expanding access to whom and how is a big topic. Maybe just to get started, what do you think of that?
I think it's the right thing to do. Finish, leave the stage. I think that it's odd to me, and has been odd to me for the longest time, and I've had many conversations with regulators all over the world about this, that retail, wealth, however you want to frame that, has largely been stuck in the most volatile asset class and in only one direction. That doesn't feel smart to me. It doesn't feel right that institutions are the only place that have had access to alternative investments, portfolio construction, orthogonal or uncorrelated risks, therefore, of return. And yet the fastest growing segment is wealth. And so I'm all for providing opportunity where people get access, maybe not directly with Man Group in the sense that I don't want to face wealth and retail. There are very successful and fabulous platforms that I can work with. But I think it's incredibly important that we democratize that access, that we say that there are products and capabilities that can be really important parts of your portfolio and your own wealth management, given that we're also handing over your own financial security and future largely to individuals. The challenges are, of course, that we don't educate people in this space. And that doesn't mean just through their own schooling, but we also don't give them advisors who are well educated. And there are thousands upon thousands upon thousands of products out there. So how do you find mechanisms to get the right products to the right people with the right risk profile? And that's a challenge when I look at the rooms of people and the 5,000 people I'm told are at this conference, some of the smartest brains and minds from all over the world, where we pride ourselves on being able to fix really complex issues. I don't know why we can't lean in to fix this. I don't know why it is beyond us to do a better job for this segment and find better ways of ensuring that people managing their own wealth have access to the best investments that are diversified for their own future security. So I'm a buyer. I don't think it's without challenge, but I think it's incredibly important that we do our very best to lean in.
Mm-hmm. There are obvious challenges on the policy and regulatory front in finding the right balance, like where should those regulations lie and how to get it right, not whether to do it. And I think we'll hear a lot more about that in coming years. But I would imagine there are also challenges in your shoes, which are very nice.
You're welcome.
Around capacity constraints or liquidity.
Well, that's an interesting thing, right? I mean, even when you're looking at less liquid, assets, credit, for example, you're seeing fund structures which are evergreen, which allow people to come in and out of them, that there are liquidity capabilities within them. Probably the fastest growing space. You're even seeing credit ETFs now. So it's not beyond us to construct wrappers or mechanisms through which people can access these returns in a way that actually matches liquidity. But it's not straightforward. And it's about being nuanced in this. And let me do it a slightly different way. As we sit here, my 21-year-old son, who he's going on about 15, love him dearly, but not the smartest cookie sometimes. He can open a crypto account in 3 clicks. We're okay with that? That's cool?
I think that's a different conference.
Maybe. So, but it's something that we have to recognize that these developments in other spaces are happening very quickly. And the access to information and knowledge, it's like relying on old media, right? It isn't that you should abandon traditional media, I promise, but not recognizing there are much more interesting and diverse ways of communicating with entire generations now is really, really important. So how do we raise ourselves into this space of education? How do we ensure that these individuals and that people are managing and have access to assets, making sure that the liquidity match is there, is for sure an issue. And we've been doing this for a long time. It's not like we don't know how to run products with liquidity, either daily or weekly or monthly or quarterly or yearly or so on and so forth, or interval funds as we've got now, or evergreen funds or ETFs. There are mechanisms, and I would be surprised if not everybody in this room knew every one of those mechanisms to provide the right access with the right liquidity terms so that people could enjoy the benefit of uncorrelated returns in their own portfolio construction.
Thank you. You mentioned media, so I want to maybe take that a slightly different direction, but stay on that topic. Okay. How do you think about Man Group's brand and what you want to get out there into the media, your marketing efforts, speaking now probably mostly to institutional investors, and then tying back to the retailization conversation, does that change if the industry is really pushing to get in the hands of more investors?
I think brand does matter. It's one of those things that I'm not very trained in, I have to say. So marketing people in the audience, I apologize deeply for my lack of knowledge, and thankfully I have a great marketing team. But there is no doubt that there is brand awareness that matters. It does. I mean, whether it's the sneakers you wear or whether it's the places you go and the particular milk you buy, branding matters in this. And we're not above that somehow in our intellectual ideologies. So I think we have to work at being better at communicating who we are and what we do. I think we have to work on making sure that there is a trust in what we do. And brand is a lot about doing that. For Man Group, I sit here with an English accent in America, and it's one of those moments where I know we have to do a better job in the US. We have deeper brand recognition in Europe and in parts of Asia where we've been for a long time. The US is a big market with a lot of incredible operators and managers. So we do have to do a better job of that. It is important, and finding the right way of doing it, both in traditional and new formats, I think is what's important here. And I'll go back to an earlier statement. I recognised and did a bit of self-reflection at the end of last year about what media sources I look to every day when I wake up. You know, when you wake up in the morning, you're bleary-eyed and you can just about get your phone to open the face recognition because you're looking that bad. And you click and you go through your media. What do you look at? Yeah, I look at the FT and I look at the BBC and maybe I look at Al Jazeera and maybe I look at the New York Times. And actually, it was that 21-year-old I was talking about who said, "Hey, Mum, have you listened to the Joe Rogan podcast that you did with Donald Trump?" And I hadn't. And so there's a whole slew of how do we connect on social media and how do we connect to ensure that we reach people in the right way and that we are innovators, we are creators, we are, what keeps me awake at night is not being entrepreneurial in our organization, not finding new sources of alpha, not doing a better job every single day. To not use the toolkits available to communicate that doesn't seem smart to me. So yes, we're going to flex through different media platforms, but I've got to do a lot of learning and reflection a little bit too.
And you have a 21-year-old to keep you fresh.
It keeps me
major
something.
advantage.
I'm not sure fresh is how I describe him, but yeah.
Yeah. Well, we think of the broader topic on behalf of the industry as well, because as you think about your organization, the brand awareness of what is a hedge fund, what is alternative asset management, still has a lot of work to be done. Certainly in the U.S. and I'm sure around the world, we spend a lot of time trying to improve that and finding ways to do it in more innovative ways. It's a hot topic. Want to shift now. You talked about innovation and finding that next alpha. As a pioneer quant fund, you guys have been using advanced technology for a very long time. This is a comfort zone, I think it's very safe to say, for Man Group and for yourself. And there is so much that we are all experiencing. You made reference to the news yesterday. There's a lot going on in the world, but specifically with regard to the evolution of AI. How does Man Group and how do you as CEO think about the way you use AI and also investment opportunities?
So it was very funny. I mean, it wasn't funny. I was at Breakers yesterday, and I was sitting with a bunch of equity folk who basically led every conversation with whether they'd made money yesterday or lost money yesterday. That was it. And there was very little conversation about the fact that beyond the Magnificent Seven, what does this really actually mean, really? And that for me was the different perspective of being at Man Group. So you're right, we've been pioneering quant techniques for 35 years. We have used and continue to use machine learning, NLP, large language models, AI. We have our own iteration, as probably many of you do, of GPT and generative AI. We use robotics through the firm. One of the things we talk about, which is slightly odd given we have, 40 plus nationalities. Second most spoken or talked about language in the firm is Python. First is English, just to be clear. So, we are absolutely, our DNA is made up partly of quant and tech. That's who we are. But we never position ourselves as a tech firm. We position ourselves as an asset manager, an alternative asset manager who enables and uses technology. So we're excited by any new tech that comes along. And if we can get at it cheaper, great. I think the skill here is understanding that having phenomenal technology in the hands of people, perhaps, who are not skilled, isn't all it's cracked up to be. The analogy I use is perhaps a blunt one, but the surgical techniques that neurologists and neurosurgeons now use are extraordinary. And they use a bunch of algorithms and a bunch of capabilities that allow them to be more precise, more successful, have better outcomes. And when people are operating on your brain, you do want better outcomes, perhaps more so than anywhere else. Maybe your heart. Anyway, that aside, you still don't want me to be undertaking neurosurgery. It would be a bad outcome, irrespective of how good those tool sets are. And that's the same, I think, in our space. That tech becomes table stakes. The skill is deploying them to ensure that you have the best outcomes. Not all data is good data. Not more data is better. And so for me, I'm lucky, perhaps, in that I have 650 plus people who self-identify as quants, modelers, developers, technologists, data scientists. And so I have extraordinary high conviction when they tell me, this is really interesting and game-changing, and these bits are the bits of the downside risk. This is how we played with it to break it. This is how we got it to hallucinate data. This is how we got it to make the model work when it shouldn't. That's as important in this game, I think, as being excited by the upside, is to understand the downside. But DeepSeek, it was really interesting. And by the way, it's not, of course, just about the Magnificent Seven at that point. It's about what it does to GDP if you take down the reliance on storage and servers and speed and electricity. These are impacts at percentage point levels of GDP. Now, got softened up today, so let's see. But that's the interesting piece about where this sits. But it did demonstrate fragility of what is effectively driving the S&P return.
Robyn, how do you think about the competitive landscape? In some ways, I might argue you all have had an edge for a long time because you've been using technology in really advanced ways. As it becomes more accessible, how do you think about that?
I ever were it thus. I've said that twice now. God, I need to stop saying that. So 35 years ago when we first launched our Momentum Fund, we could charge a level of fees associated with that were quite extraordinary. In today's terms, we would be like, sorry, how much? And maybe we access 30 markets. Roll the clock forward and pan out, and we are accessing more than 600 markets. And we have changed the models through time, and the fees have compressed. And there are more players in this space. So that's back to my innovation point. If we're going to be good, you've got to be really good, and you've got to keep running very, very fast, because alpha decays, and it decays real quick. But getting access to it, finding it, making it material, being able to scale it, that's hard. And so you want the very best in your firms to be able to drive for that and to deliver it. Back to what was said at the beginning, all we're here to do, really simple, right? We turn up every day because we've been trusted with money from lots of people all over the world who've worked very, very hard to accumulate that wealth, and we return value to it. So every single day, that's what we should be doing. Mm-hmm.
And to drill down a little bit more on the competition piece, but I think probably something that transcends talent.
Yep.
How do you keep great people? What do you look for when you go out to add great people to the organization to really make sure you are continuing the same strong culture that you have built?
So let's go for the tech people first, because that's, we had a bit of a bump in the road a few years ago where everybody wanted to go and work for FANG. And that's because they got a skateboard and a jukebox and a free sandwich and that type of stuff. And we lost a few people into that space. We really did. And then they came back again because they didn't like working in the cubicle on one thing. So one of the things that we do is we have an open architected structure. And we demonstrate that through this thing called GitHub. If you haven't seen GitHub, look at GitHub. It's basically Travelocity for quants. And you share your code. And so you can look at man code right now, and there are 1.0 and 1.2 versions of what we have in the universe. And then you get graded by the universe of developers and programmers. And we have a really excellent GitHub star rating, better than most of the banks, probably right on up there with the asset managers' top piece. So technologists look at that, and what they want is they want to come to an organization where they get the ability to work with the best capabilities around them, access this universe of programmers in the open architected space, be right at the cutting edge of things, and then they solve with us real world issues that have a real social and valuable impact. So what we found is we don't have a shortage of people when we've got jobs in that space. And I think that permeates through our culture. It permeates who we are. We believe in a collaborative, collegiate environment. We all say it. I just can only tell you that when people come and talk to me, they end up saying, "You really meant it." I'm like, yeah, we really do. Doesn't mean we're perfect. Yeah, loads of stuff we can change and make better. But you want a workforce that feels excited about why they're coming to work, that they have a set of what they're doing that makes a difference, and that we work every single day to make sure they can be the very best they can be. And whether that's a lawyer, or somebody does cash recs, or somebody who's developing alpha signals and is one of my rocket scientists, I mean, literally the astrophysicists, everybody comes together and they know that they are valued within this organization. And I guess that's what we do, or what we try to do, and what I try to do every day.
It's wonderful. You lead with such passion and energy. The industry is better for it, really, to have you among its CEOs. Just want to thank you again for being here with us today.
Thank you. Thank you very much for having me.